I know the market's crazy right now, but we take it upon ourselves to not only help you get into a home, but talking to that listing agent, letting them know, telling them the truth about the VA home loan, how it's still a great loan and it allows the sellers to move just as quickly as if they were doing a conventional loan with the buyer.
Service members should get the most out of their VA benefits for home ownership. That's our belief, and that's why we're here. So whether you're looking to own your dream home, considering refinancing, or just exploring the VA home loan process, you've come to the right place. Welcome to Helping Heroes Become Homeowners.
Welcome to another episode of Helping Heroes Become Homeowners. I'm your host, Richard Sari with Alliance Mortgage. We've got a lot of stuff to talk about today. Why VA loans are a powerful tool for veterans. Some of the things we're going to talk about are the advantages of VA loans compared to conventional loans, the zero down payment feature, which is the huge benefit for VA, and why there's no private mortgage insurance on these types of loans. So let's dive right in. So advantages of the VA loan versus conventional, there's an array of reasons behind it. The first one that comes to my mind is you're always going to get a better interest rate. Interest rates on VA home loans are lower than conventional by at least 0.5% at a minimum. Could be a little bit more based on your credit score, could be slightly less depending on your credit score. But for the most part, you're going to be about 0.5% lower than a conventional loan. Now, why is that? Well, interest rates are determined by credit risk, but what VA does differently than conventional loans is VA guarantees a certain percentage to the lender. That's 25%. They guarantee 25% of the loan amount to the lender. So that lowers the lender's risk, which will give an opportunity for the lender to offer better interest rates because lenders want these loans because of that guarantee. They want these loans because if there's a foreclosure situation with VA, VA will step in and contact the lender on the veteran's behalf and help the veteran work something out with the lender to avoid foreclosure. Those other types of loans, conventional, FHA, USDA, you as the consumer, you as the buyer who makes the mortgage payment, you would have to handle that situation on your own. VA loans have a higher approval rate, believe it or not, putting nothing down, than conventional loans. They're about 93% approval rate versus conventional at 90%. Why is that? Well, underwriters in the underwriting guidebook, there's a specific line item there. I'm going to read it to you. Underwriters are encouraged to consider every possible appropriate factor in seeking a proper basis for approving loan applications for every qualified veteran. That is specifically written in the guidelines for VA. So the underwriter is going to look for every way to get that loan done. Manual underwrites, which is the old version of getting the loan approved before the automation was created. They're going to look at your bank statements. They're going to get that income calculated. They're going to make sure the ratios are in line. Do you have any compensating factors? Do you have reserves? Do you have the residual income requirement that VA will let you have to offset a negative event? Are the explanation letters in your file good for the derogatory credit? So there's a higher approval rate. They're going to work with the veteran to try and get that loan approved. Now, your max DTI, your max debt ratio for conventional loans is 50%. There's no gray area there. It's 50%. With VA lets you exceed 50% with an automated approval if you have residual income. So residual income is all the income that you have left after your housing expenses, your maintenance on the property, and the debt load that you have. Now, each area of the country has a certain amount of residual income that is required based on the number of people in the household. You have to be at 120% of that number to meet the residual income requirement. So to give an example, I had a loan close probably 2 months ago, and that back end ratio was close to 65%. And the reason why we got the automated approval is because he had that residual income. So don't think you cannot get approved with the income that you have or the student loan debt that you may have. Work with your lender and see if you still qualify with that high ratio. One other item is the advantage of the VA home loan is putting 100%, putting nothing down, right? But it allows you to build wealth through real estate. Now, the other programs allow you to do that too, but you always have to put money down on every transaction. If you want to buy an investment property going conventional, it's 20% down, 25% down to get the best rate. With a VA home loan, you be a little bit more creative with it, right? You have to be in the home as your primary residence. But after you stay in that home for 12 months, 24 months, you get reassigned to a different base or whatever the case is that you have to relocate, you can keep that home, refinance the home into a conventional loan, restore the entitlement, and use the entitlement on your next purchase and put nothing down. Now, you can also do the same thing if you want to keep that mortgage as a VA loan. You got to make sure you have enough entitlement left on your next primary purchase to avoid putting nothing down. Your lender will calculate that for you. But there might be a situation where you have enough entitlement left versus restoring to purchase another house. So you can build wealth. Now, another thing that you can do with that program with your VA is you can buy a duplex or a fourplex, live in the primary home, live in one of the units rather, and rent out the other 3 units, 2 units, whatever you're purchasing. And you can build wealth through rental income. And that's putting nothing down. Those other property types, if you went conventional, will require 20 or 25% down on that transaction. So that's a good advantage to have for a VA loan, obviously. Now, the other item that you want to look for is down the road, VA allows you to do what's called an interest rate reduction loan, an ERL is what we like to call it. So that's a refinance of your existing VA mortgage. Now, what's good about that is there's no appraisal, there's no qualifying income that you need. You just have to make the mortgage payment on time for at least 6 months, 210 days since your last transaction. So if you've got the 12-month or 6-month, 12-month mortgage history on time and we pull your credit and the credit's good and you want to just refinance the loan, you can do that. No appraisal. It's going to speed up the process. No income. It's going to speed up the process. No assets. It's going to speed up the process. So these loans go very fast. Now, with VA, you have to lower the rate by a minimum of 0.5% for there to be a benefit to the borrower. On your conventional loan, you'll have to qualify again on the refinance portion of that loan. You'd have to requalify to get that loan done. Again, with VA, you do not have to qualify again. You just have to make that mortgage payment on time. So those are the advantages of using a VA loan versus conventional. Pretty simple. Now, with zero down feature, we've had a lot of realtors say, hey, you're putting nothing down. We're not going to take your offer. No skin in the game. The weak buyer. That's truly not correct. The veteran has earned the right to put nothing down. They may have money to put down, but they don't have to. It's zero down. That's the feature. That's the benefit of becoming a homeowner using your VA entitlement. So I want to throw out some stats real quick. So we have a chart that we use on our Lunch and Learn classes. The median FICO score for a VA home loan, this was last year, 2022, was a 736 borrower, 736 FICO score. Median household was $90,000 a year. Average loan amount was $344,000. This is putting nothing down, right? Compared to an FHA buyer, 672 FICO, $68,000 household income, average loan amount $239,000. So what that tells me, looking at these stats, is I have a qualified conventional buyer, but they want to use their VA home loan benefit and put nothing down. So you've basically got a conventional loan using their VA benefit, 736 FICO, make plenty of income, plenty of assets, and they can afford a higher loan amount with the VA home loan. So those are the things that kind of drive me crazy when I visit with realtors, do the Lunch and Learn. They've got these ideas in their head that if they're putting nothing down, it's a weak buyer. That's really not the case. Now, no private insurance compared to a conventional loan is a huge affordability factor for the veteran, hands down. With your mortgage insurance payment, if this veteran took a conventional loan versus VA, VA has zero mortgage insurance. VA is already guaranteeing the loan 25%. They're going to come in and they're going to help the veteran in case of foreclosure. There's no need for that. With a conventional loan, you've got to go into the private market and get mortgage insurance by a third party to insure the loan for the lender in case it goes to foreclosure. They're going to pass that monthly payment on to the borrower, which is what they do. So what determines that payment for a conventional loan? It's your credit score, it's your loan to value in the loan term that you're doing, and your debt ratio. Those factors come into play to determine your mortgage insurance payment. So if I took this VA borrower to a conventional loan at a higher interest rate, and he's going to have mortgage insurance, the house could be $200 or $300 more in payment versus VA, nothing down, no mortgage insurance. It makes no sense, right? So when we're doing those comparisons for the veteran will see that the VA loan is the way to go. With the better interest rates with VA, it's always going to be hands down the better loan, the more affordability in today's market. It gives the veteran an opportunity to refinance that loan with no qualifying items needed, no income, no assets, no appraisal. Just got to lower the rate. Got to make sure the closing costs do not exceed your savings by 36 months. We've got to make sure that there's still a benefit. Conventional, you've got to go through the whole process again. You've got to qualify on the appraisal, got to qualify on the loan, got to qualify on your debt to income, whole 9 yards. Hopefully this information was useful to you guys. The VA home loan, it means a lot that we get as many veterans in homes this year. I know the market's crazy right now, but we take it upon ourselves to not only help you get into a home, but talking to that listing agent, letting them know, telling them the truth about the VA home loan, how it's still a great loan and it allows the sellers to move just as quickly as if they were doing a conventional loan with the buyer. Hopefully this information was useful. If it was, please throw some comments down on my podcast. If you have any questions, you can always go to my email address or my website. Talk to you guys again, and thanks again for listening.
If this episode has been beneficial, we'd love to hear from you. Please leave us a review on your favorite podcast platform. Also, for regular updates and tips, make sure to follow our social media channels, which you can find in the show notes. Until our next episode, keep making homeownership dreams come true.